everyone, my name is Darshini Periyanan. I'm from DPR 1A. Today we are going to present about accounting process and books of accounts. My group members are Darshini Periyanan, Shalini Marthawanan, and Siti Nur Aisha binti Muhammad Tayal Sultan. Accounting process. The accounting process is a series of procedures in recording and processing all financial transactions of a company from when the transaction occurs to its representation on the financial statement until closing the accounts. There are 5 basic steps in accounting process. Accounting cycle divided by 5. It is start from source document, journal, ledger, trial balance and financial statements. Let me see some types of source documents. Firstly, invoice. An invoice is a document issued by a seller to buyer that lists the goods or services that have been supplied and says how much money the buyer holds for them. An invoice is issued before payment is received as a way of requesting payment by a specific deadline. This is the example of invoice. Secondly, cash bills. Cash bills is a document receipt of cash payment as opposed to an invoice or promise to pay. A bill serves as a record for the customer of the goods or services provided by a business and acts as a reminder of payment owing. It's some example of cash bills. Thirdly, credit notes. A credit note is a document sent by the supplier to the customer notifying the customer that he or she has been credited a certain amount due to an error in the original invoice or other reasons. A credit note is also known as a credit memo. These some examples of credit notes.
Receipt is a document confirming that the seller received money from the purchaser. The receipt typically includes the date and a description of the item the buyer purchased. This is an example for receipt. A voucher is an internal document describing and authorizing the payment to creditor or supplier. A voucher is essentially the backup documents for accounts payable which are billed on by companies to vendors and suppliers. This is an example for voucher. Accounting memo is an internal document of the company which is used for accounting records when it comes to transactions that have no external media or transaction for which there are no specific internal documents. Examples are drawing of goods or asset, additional capital, etc. This is an example for memo. A check is a document that orders a bank to pay a specific amount of money from a person's account to the person in whose name the check has been issued. This is an example check.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Nur Aisha. I'm from DPR 1A. So today I will explain about books of prime entry, and it also known as books of original entry. Okay, let's see the first one. A book of prime entry is the book where the first accounting transactions are recorded. Transactions are recorded from their self-document. The work should be completed day by day. The books are also known as journals and cash book. The information in these books are later summarized and posted into general ledger for which the financial statements are prepared. There are 2 types of journal. The first is special journal and the second is general journal. So in the special journal we can see save journal, purchase journal, return inwards journal, return outwards journal. So the next we can see what is cash transaction? A cash transactions are ones that are settled immediately in cash or through checks. All the cash transaction will be recorded in cash book. And now we will see what is journal transaction. A journal is a detailed record of all financial transactions in order by dates. All the credit transactions will be recorded in journal. So now we will see different types of book of prime entry. So here we can see the different books. So this is the example of journal. Here we can see. So here we can see the example of cash book.